Hi everyone. Today markets did establish a lower high in the pre-market, sold off really aggressive, broke the level here, but then we got close to trend support and we found a little bit of a hold slash bounce into the close. Let's take a look at this structure here and see if we can give us some idea of where we might go in the next couple sessions. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Moving over to fear and greed, we finished at a 36, flat from the previous. Interesting to see that. Shows a slight downtick here, but 36 to 36. 38 was the most recent peak. Back into extreme fear here on momentum. Not great. Strength continuing to trend down. Although breadth continuing to show a little bit of strength there. Still in extreme fear, but trending higher. Put call ratio, greed, still trending lower there. Still in this kind of same neutral range. And then looking at volatility spiking up as you would expect. Safe haven demand turning down, regular fear, and then junk bonds really not showing any panic at all, still sitting in regular greed. Then looking at seasonality, we expected a bear move today, which we ended up getting. Tomorrow expected to be a little bit more bearish as well. And then that's supposed to be the bottom or the relative bottom here for markets. And then it's supposed to be rallies through the rest of the month. So seasonality continuing to be relevant, and it does make sense for it to go a little bit lower and then rally through, depending on what we see in the next couple trading sessions. Moving over to the economic calendar, Eurozone unemployment rate 6.3, in line with expectations, trade balance pretty good. JOLTS job openings, lots of job openings. Job market continues to be okay at least. ISM non-manufacturing prices and PMI much better than expectations, really good numbers there. 64, way better than the 57 on prices. Maybe not super great, but PMI good. 10-year auction 4.6, pretty solidly higher than the previous. Atlanta Fed Q4, better than expectations there. For tomorrow, initial jobless claims, ADP non-farm employment, and then you have 30-year bond auction and then FOMC minutes. FOMC minutes could be interesting. The FOMC mentioned potential job weakness, but we really haven't seen that, especially based on the JOLTS job openings. But I think this could be a potential negative catalyst into the end of tomorrow's session. Remember, it comes out at 1400. Thursday, national holiday, expecting markets to be closed. And then for the Friday, all of the unemployment data. If this ticks up to a 4.3, that's going to be catastrophic. Needs to hold here. The expectation is a hold. And then looking at Max Payne, everything is now bullish into the end of the week with the bear move that we saw today. Bullish across the board here for the next 9 days. We'll see if that holds up or not. You can see 7 days from now is basically flat. So maybe we see an upswing, then a downswing, and then a flat here. Either way, bearish for a couple of weeks from now. But in the short term, I'm not expecting anything super bearish. Moving over to the charts, starting off with the S&Ps here on the daily chart, you can see we did get a big down day, 1.13%. We took out the 591 level, closed below it. But look at this structure here. If it holds a higher low here, that could still be interesting. You have some trend support in here, 586 or so. My level 585.90. Momentum is back to bearish. RSI is back to bearish. We're back below the SMA. So if this structure breaks, then we're expecting a push down to 579, maybe even a little lower. Some trend support in here, 577. But for right now, your structure is right in here. You can see a little bit of a bounce into the end of the session and the after hours here. You can see the candle break here. We talked about it in the open, broke down, retest, sell. But at the end of the session, we threw a big wick, found a little bit of buying pressure. After hours, we're drifting a little higher. If we can get above 591, hold the level and push, that would establish a higher low. And then at that point, you have to assume that this is basically consolidation at this point. You kind of have a consolidation already with a high, just a very slightly lower high here, and then a low, slightly higher low here. So at this point, it seems like we might get a little bit of consolidation, pull back in time, which to me says this should go a little bit higher eventually. But at this point, I would be patient. It does look kind of bearish for sure with the high, lower high here. But again, you have a low, higher low here. And if this structure in here holds, I would be patient and potentially a little bullish off of that. Moving over to the SPY charts here on the Tasty charts, you can see we're back into bearish conditions with the sell. Makes sense. Touched that lowest ATR band, found a little bit of a bounce. But again, look at this huge volume at the end of the session, ended up bouncing from there, ended up holding and showing a little bit of bullishness into the end of the session. That's why I think this might be a low, higher low in here. Of course, everyone might have a different opinion on it. Certainly depends on your perspective. You also have bearish conditions now on the 4-hour chart with your ATR trailing stop up at 598, which again would give you room for that retracement into that lower high here, and then the continuation down into that 581 area, which would kind of take you back to the low of this consolidation. Volume came through on the buying candle. I think you could make a decent argument for either direction, which is partly why I think we're probably going to see a little bit of sideways consolidation. And then moving over here to the NASDAQ, same thesis, down 1.78%, took out the 519 level. I was not paying attention to this super closely, unfortunately, so I kind of ate most of that, but again, you have a very similar setup. We got the breakdown from the trend, but we're holding in here. You have this uptrend. If that's going to hold in here around the 512.50, 513 area, that could be interesting. Again, momentum and RSI say not so much. Looks a little bearish there, but you have the 55 EMA as a potential support, basically at 510, 509.99, my level 509.74. For me right now, what I think is probably sideways choppy, kind of the same setup as what we're seeing in the SPY charts, with a low, higher low potentially here, with a high, lower high here. Sideways choppy action, allow this 55 EMA to drift higher as price kind of drifts with it. And then once that 55 breaks, then you start to see this kind of selling action a little bit more. But for now, I think we're probably going to get some sideways choppy out of this setup. And then you can see it here on the hourly, very, very similar to the SPY charts. Came down to the key level. Big overthrow of that 514.92 level, held it on a closing basis, finding a little bit of a bounce here. Short term, I would say rally to 519.50. If it touches this zone and then rejects, then I would look for a lower low down into the 509, maybe as low as 503. But for right now, I'm looking short-term rally into that 519, 520 area. Then moving over to the Qs, basically everything is the same here, but the main difference that I wanted to highlight is that this ATR trailing stop is actually still to the bull side. So you have a trailing stop at 515.58. Came all the way to that level, overthrew it quite dramatically, and then we held at this level. Is it going to rally through a little bit more, have this higher low set up here, and then continuation? I certainly think you can make an argument for it. You can see these lower ATR bands trending up a little bit with it, even with the markets going lower here today. Upper bands kind of squeezing. Again, you could argue for sideways choppy, maybe slightly bullish grinding price action. Either way, I don't think you can make a clear argument. Moving over to the Russell and the Dow. The Russell did sell off 0.8. The Dow was about half of that at 0.42. Momentum on both of these still stepping to bullish. RSI still above the SMAs. Really, this didn't change my thesis at all. We're still in the same kind of trading range we've been in. Again, sideways choppy. We tried to break out, not super convincingly. Right to these highs, sold off from there back into the middle of the range. Now, I guess at this point, if you see a sell below the range here at 218.13, that would be a break of structure, and then you would expect much lower lows to come. But for now, seems like we're holding up okay. The bigger concern for me is that this is starting to look a bit like a bear flag with a big sell here, grinding price action, trying to go a little bit higher, not doing it. And then if this breaks structure here below this area, that would be quite dramatic. So for now, we're holding in, waiting to see what happens, but watching closely for that break in a potential bear flag setup. Moving over to the Mag 7, sold off 2.33%, still above the level here at 315, closed at 319, back below these short-term EMAs. You still have this 55 all the way down there at 304. This is part of why I think we're going to wait and see some sideways consolidation in here, wait for this 55 to kind of catch up into here, and then once it breaks below there, then it's going to be all bets are off. But for now, we're still above that 55 EMA, which continues to hold as support. We haven't tested it in a while. I think it's going to take some pullback in time for it to catch up before we see a major breakdown. Moving over to Apple and Microsoft. Apple selling off pretty aggressive, 1.14%, right back down to the level at 214.83. Still has not closed below that level. It's bouncing just a couple of pennies there after hours. Momentum bearish, RSI still bearish, but the key level still continues to hold. Interesting to see it. As long as it closes above that on a daily basis, probably in good shape. And then looking at Microsoft, big sell there, 1.28%, right to the trend, touched the trend. And then we held the level, seeing a little bit of a bounce. So this continues to support the thesis with a low, higher low in here. Maybe you see a little bit of rally, sideways consolidation in here. Nothing breaking down. We did pull back for sure. We said that was a possibility yesterday, but so far all of the structures have held. Moving over to Tesla and NVIDIA, super glad I took my profits on NVIDIA yesterday. Absolutely massive down day on their announcements, 6.22%. We took the trade here on the 3rd, we sold here somewhere on the 6th, right around the all-time high level at my price target. Went perfect on the trade, and then we were out of it today, didn't even look at it, and fortunately for me, I missed all of this down move, so you like to see it. Big selling. We did see a slight bounce at the end of the session, but I would not touch this at all. Filled the gap here, you still have a gap back to the second. Close below the level, everything looks terrible on this move, and then looking at Tesla, down 4% as well. Again though, look at this structure, we're right at the trend continues to be relevant, touched it here, momentum bearish, RSI still bearish, but for now the trend is holding. If it can hold the trend, you're in good shape. If it closes below it, not so good. Moving over to Amazon and Google, both of these selling off 2.5% and 0.6% respectively. Amazon back below this trend structure here. Let's go ahead and extend that out. But again, once again, we are right here at this trend support. We're holding the trend support. If it bounces from here, great. If it breaks down from here, not great. Momentum bearish, RSI bearish. And then looking at Google, push towards the trend, didn't quite touch it, sold off. It's falling a little bit after hours. Momentum, flat, RSI a little bit bearish. Both of these could go either way in my opinion. Let's go ahead and extend this out just a little bit there. Pretty much right at it at the low of day, selling after hours. Either way for me, looks like a topping pattern. Just waiting for these EMAs to consolidate, and then we'll probably fall back down to that 55 EMA. Moving over to Meta and Broadcom, you got both of these selling 1.9 and 3.2%. Momentum still bullish on Amazon. Interesting, we did not engulf the previous candle. We touched the 21 EMA, bounced from there. Okay, interesting. Still kind of in the same trading range. I could see this as a pullback bounce continuation to the trend here around 630. As long as the momentum's good, RSI still above the SMA. I wouldn't say that Meta is going to break down anytime soon. Continues to hold up really, really well, even with their announcement of abandoning censorship and moving back towards a more free speech platform, probably to compete with X, which continues to do really, really well on a user basis. And then looking at Broadcom here, 3.2%, right to the trend, still holding there. Momentum and RSI are both bearish, but again, strong catalyst, price is still holding in here, waiting for the 21 to catch up, VWAP still there as potential support. Moving over to staples and discretionaries, got a bit of an everything sell, 0.35 and 1.94%. Got discretionary selling off pretty aggressively. Still can't even get to that 55 EMA, which is there at 218.50 or so. Pretty much right in line with these highs back here from mid-November. And then looking at staples, you can see broke the level here, closed below it, new low relative to this previous kind of push sell here. Looking for the trend at 76.27. Super oversold at this point, added 26.5, but wait for this falling knife to end before you start to dip, in my opinion. Moving over to worst and best sectors, you got semis down 2.38%, back below the level, 256.26. It's bouncing a little bit at the end of the session, but nothing great there. Almost filled the gap, didn't quite do it. I would be patient here. If it can get back above 256, maybe that's a bullish trade, but for now, I would be patient. And then looking at oil and gas, this has actually done quite well. You can see pretty solid rally here, big down day yesterday, but held the level here at 135.07, retested the level and then bounced 1.13%. This seems to be a really solid buying opportunity in here between 125 and 128 or so. Now you're back into the mid-range, kind of no man's land. Maybe we rally back up to 145.92, but maybe this turns here and sells back down to the 128 area. So kind of up to you. I would have a really tight stop if you're going to trade it to the bull side using that 135.07 level. Moving over to breadth. Breadth continues to have positive days. 20-day breadth, 5.5%. 50-day, 5.25%. A little bit better than yesterday. Momentum back to bullish. Tested the 26 level again. We're still in this kind of choppy range here. And this is partly why I just don't think that markets are going to go lower, at least in the very short term. Medium term, I can absolutely see it, but in the very short term, you have a base, having a little bit of a breadth rally. And until this kind of culminates, I don't think we're going to go too much lower. Moving over to yields, let's go ahead and talk yields. Really strong day for yields. About a 1.3% move on the 10-year, continuing to see this aggressive re-steepening. You can see the 2-year basically flat. It's been in the same trading range since mid-November at this 4.25 area, but now you got the 10-year pushing back to 4.75 almost. If this continues up to that 5 range, which Certainly seems like it could at this point. We're back to these mid-April highs. If it pushes back to 5%, I think that's going to be pretty catastrophic for markets. Last time we were at this 5 range, that was the October low of 2023. Since then, we've had a nice rally while this 10-year kind of chopped sideways, but the 10-year has been super aggressive over this medium term since September all the way to current price. If this continues to rally to 5, that's going to be very concerning. Moving over to dollar here, you can see the dollar was up on the day, 0.37%. Makes sense. Yields were up. Dollar was up. We had a bit of a double bottom in here at the 108 area. Touched that level here. Looks like we're rallying once again. Closed near the high of the day. Waiting to see how much higher it can go. 109.50 is your next level. You got some trend structure in here, but 109.50 was basically the top, and I think we're probably going back there. Moving over to bonds, J&K sold off right to the trend. Momentum still positive. RSI still trending above the SMA, waiting to see if we retest here. And then looking at TLT, big sell there with the 10-year continuing to sell. 85.90 was the level. We pushed right to it. Makes sense. Momentum back to bearish. RSI oversold once again at a 29.17. This is the level from this consolidation in here. Touch that level is a key level. Closed pretty much right on top of it, waiting to see if that holds or if we sell back to these relative lows here at 82.6. Definitely going to be interesting, but right now watching this level closely. Moving over to my accounts, I pretty much didn't do anything with it today. I just sat on the shares and the calls. Like I said, we didn't really break too much of a structure. And we're only about $1.70 or so below my covered call here at 517. Still have about $1,000 left in credit on that. I'm just going to be patient here. I have a couple of days on it. I don't feel the need to rush unless we see a break in those structures that we talked about. So just being patient on those. And then looking at the IWM, I did roll down and in one day there to 223 for 3 days from now for $2 credit. That ended up being a pretty good trade there. So pretty much right at the money for 3 days from now. Looking to collect another $2 in credit there. So still overall not in terrible shape. Being patient at those critical levels. If they break down tomorrow, absolutely I'll be out. But for now, I think there's a possibility that we bounce from there. Let me know down in the comment section what you thought of the charts and the movements here today. Did you sell out of everything or are you still holding? Let me know. Otherwise, like and subscribe if you got any value out of today's video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.